It's going out there. It's October 13th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down headlines and tell you what's really moving these markets. Man, a lot going on, especially earnings season. There's 21 companies that have now reported, a couple of big names. The next couple of weeks could be crazy. That's just one of the topics we're going to talk about right now with the one and only, best-looking guy in the world, smartest man ever, Frank Curzio. I'm going to bring in Daniel Creech, who's a senior analyst here. He was smiling as I said it. So
I thought you were talking about me there for a minute, Frank.
How's it going, man? How's everything?
Good, wonderful. Hey, space or deep blue sea? You know William Shatner's going to space today? William
Shatner is going to space today, and he is 90 years old.
Yeah, that's impressive.
90 years old. And
is it? It's today, right?
It is today, and I have to tell you, I mean, that's when I want to go to space, when I'm like 90, 95. I don't want to go like now. I just don't trust the system yet.
In case you die?
Yeah, at least I got most of my life over with. But, you know, I'm not saying that I won't live for another 15, 20 years, all new technology and stuff. But if I'm going to do it, that's when I would do it, go to space that late. I don't know if I do it before that.
Really?
Would you?
No, hell no. Two quick things. What do you think about when you think of William Shatner? And then space or ocean, if you had to go to one? Like, would you go out in outer space, or would you go to the deep sea and look around down there?
I would go to the ocean,
okay.
I think I'll go to the ocean. And Shatner, Star Trek, and people forget, this was a series, I think it started in 1966 and only lasted 3 seasons. Everybody hated it. And then they just started bringing it back. And when the movies came out, that's when it really, really took off. But, man, I remember Shatner. I'm old. People don't remember, the TJ. Do you remember the TJ Hooker days or no? No. So, damn, I'm old. So what do you think about with Shatner?
Boston Legal.
Yeah, Boston Legal was good.
And I didn't watch it when it was current. You know, it was several seasons in, or maybe even over by the time I came across it. A friend of mine was talking to me about it in college, and him and is it Spader?
Yeah.
Shatner and Spader?
Spader.
Man,
Spader's career really took off, right?
Those.
The Blacklist.
Man, those are hilarious. Now, I haven't seen that. I've heard nothing but good about that.
Yeah, it's good. It got a lot of seasons in. Yeah,
but their back and forth is just amazing on screen. So I really, Boston Legal's fantastic if you haven't seen it, or go watch some of them again. And especially for today's world, like I can't believe people aren't going through those old shows and running William Shatner and those guys, because those were hilarious. But politically correct was out the window.
Oh yeah, a lot of things that you watched back then, forget it.
Yeah.
Now it's, again, you look at emails, and Gruden got fired.
That's another thing, real quick.
To see
how do you
emails.
fire Chucky in October, Frank?
Right before
John
Halloween.
Gruden is Chucky, for all you non-sports
Yes,
fans out there.
Right before
And
Halloween.
he even claims that himself. He does look like Chucky.
Yeah, he does.
And he
look like
also
Chucky.
dresses up like him at Halloween, I think, probably on the regular. But yeah, how do you fire Chucky in October? That's almost just funny.
Those emails must have been bad, really, really bad. But he might get off easy. You might not see those emails. Kind of like Matt Lauer. Remember, he used to have the show Where's Matt? I wonder where Matt Lauer is now. He used to have a show Where's Matt Lauer?
Oh,
and
I don't remember that either.
I wonder where he is right now, because he got off pretty easy for having an automatic lock on your door and all that stuff. And they were just like, oh, we couldn't. Next thing you know, like a day later, he's gone. No one ever seen that guy again. I mean, that guy, everybody else career, they dragged through the news forever, whatever. That guy just, man, where in the world is Matt Lauer? I'm curious. But I will say this, outside of those events that have taken place and a lot going on, I mean, this is the best part, right? We love this part of the markets, which is earnings season. 21 companies that reported. You can see hundreds over the next couple of weeks, 2-3 weeks. Small caps, extend that a little bit further, but most S&P 500 companies are going to report. Recently, we got Delta, JPMorgan, BlackRock. We can start with Delta. I mean, Delta is a name in our portfolio. It's a big name. I'll give it away. We're up a little bit on. I just love what they had to say. I thought it was a great quarter. All three of those companies pretty much beat on top and bottom. So, but great comments from CEO as well. But I don't know what you thought about those numbers.
Yeah, I saw a headline that just kind of made me scratch my head, because there was a headline somewhere about Delta unexpectedly warns about rising fuel cost. I don't know how you weren't expecting rising fuel costs with oil going through the roof and everything else. So that kind of cracked me up. With the airlines, I mean, you've been spot on with this. I think it's down a few percentage points today. This was a good quarter overall. I'm still really nervous about that, just because of the regulations coming down on the vaccine requirements and things like that. But it's great to see from an investor standpoint, and in my opinion, just a human being who's rooting for freedom. The Delta Airlines CEO basically says people aren't worried about the Delta variant, and they expect travel to pick up. Yes, rising costs on the fuel side are going to hurt them and maybe not even get them profitable in quarter four. but it's good to hear that people are, quote unquote, getting back to normal, in my opinion, on that side.
I think the big takeaway here is you're seeing a difference in airlines because Southwest is getting destroyed. You saw the cancellations. They're blaming Florida, blaming weather. I live in Florida, and it's been pretty nice here. I don't know. Maybe they're going to other areas of Florida it's raining at or not good. I don't know. But you could tell a difference, right? This isn't industry-wide where we have labor issues and union issues and all this. This is, Southwest is just its own airline that's not doing good. While Delta, the surprise is they said they're going to get to profitability this quarter. And just to put that in perspective, Delta is the first major airline to get to profitability. And from the CEO, what he said, it's going to be the only one. But he said it might be pushed back a little bit, so that might be a little bit of negative because of those fuel headwinds. Corporate travel began to pick up. It's at 40% of pre-pandemic levels in Q3 and was at 50% as of last week. That's what you want. When I talk about supply issues, guys, and all the data I learned from everyone sending me emails and looking at the right places for the supply chain data, it has not bottomed yet. The numbers keep getting lower and lower and lower. Here, this is a good example. This is why I think it's great to invest in airlines because you're seeing the bottom. The bottom was in 40% corporate travel. Now it's 50%. I'm starting to travel. I'm starting to see much more people travel. My friends travel. They're actually going to the major cities now. So that's going to continue to increase. And these guys are already showing amazing numbers. So what do you think is going to happen when international opens up a lot more, when people don't have to wear masks all the time, the boosters or whatever you agree with it or not? That was all good news to me, and I think just Delta's an absolute steal here. If you have an 18, 24-month time horizon, which, 99% of people in the world don't.
Yeah.
Everybody wants to be rich tomorrow. But Delta's a great play to just put in your portfolio. It's going to be high. Profit's going to rocket high, unless we see another, Delta strain type thing, but I don't see that happening.
Yeah. I saw a meme couple weeks ago where it said, I survived the 10-15 market crash, because everything happens overnight and instantly right now. You're right. Nobody has a 12 to 18 month outlook, Frank. That's way too long.
Nobody.
To your bigger point that you've talked about a lot of times just in general, when companies have to go through tough times, cut a lot of costs, then when demand or anything, it just starts bottoming out. Like you said, things don't have to get great or back to normal. They just have to get better or stop getting worse. So domestic passenger revenue was only 72% compared to September of 2019. However, that's good because it's heading in the right direction. And that's amazing because they've cut so much cost that now they're more lean, efficient, and all that kind of stuff. So you don't have to get back to 100% or wait that from an investing standpoint. So that's a good point. This was a good quarter. I mean, it'll be interesting to see going forward. I'm still cautiously long on this, but I think this is low-hanging fruit out there.
And then you have JPMorgan came out, blew out the numbers, expected. We're going to see that from every bank. There's so much money flooded into the system. There's so much spending. So you're going to see a lot of these banks beat and maybe pull back a little bit because they've been outperforming the market, which is, kind of normal. If you're running up strong into the market, even if you report numbers that are great, you might see a little bit of a pullback. And then gradually over the next couple of weeks, you see it, start rising again. That's been the trend for the past few years. But instead of looking at these numbers, this is why I tell everyone you have to listen to the conference calls. If you don't have time to listen to conference calls, you could buy services like Fly on the Wall, Briefing.com, where they'll provide bullets for you, right? So we'll get bullets of every single company and what the CEO is saying. That's relevant across all industries, especially what Jamie Dimon has to say outside of what he's saying about Bitcoin, which is a market he clearly doesn't understand or why people are buying it. But consumer credit card spending up a lot, expected. Supply chain issues he believes are going to end soon, which I'm surprised to hear because they are not a supply chain company. I don't know if he's looking at the same data I'm looking at. I don't know if he's seeing Apple and all the supply, like Bloomberg came out, I think, with Apple lowering their iPhones demand because not demand, but just supply chain issues, right? So production, they're lowering their production. And that was Bloomberg saying it. I don't think Apple came out and said it, but I saw about 4 or 5 sell-side firms lower their numbers on the component makers. Okay, we're talking about the largest ones, the parts that go into the iPhones, which is Skyworks, Broadcom, Texas Instruments. So they are all struggling to deliver their components for the Apple phone, right? The new phone, the 13. So you're seeing that, but Jamie Dimon says, hey, it's not a big deal, but he's not really. He hears from these companies. I'm listening to these companies too. They're coming out publicly and they're saying, you listen to every CEO, they all have supply chain issues. I think it's going to last through 2022 and even longer. I hope he's right, but I don't agree with it there. But another comment that he said, and this is why it's important, you're not just listening to that conference call for just JPMorgan because I want to buy it or sell it. It's listening of how you can get ideas. And he said M&A is going to remain active, which tells me it's a very, very strong market. That's when you see M&A. And credit losses, they didn't say low. Credit losses, very low. That's what you have to consider. We're taking on loads of debt. There's a lot of companies out there, and everybody talks about debt. It doesn't matter how much debt we have, as crazy as that sounds, as long as we're able to pay it. And if you're not able to pay it, that's when you'll see things go haywire in the bond market, credit default swaps. You'll see it. But when you see credit losses very low, means most businesses are still doing very, very good, and they're not concerned for now. Maybe that changes in a quarter from now. Maybe we see higher inflation and raw material prices really, really take off. But for now, to me, I was surprised that they used the word very, very low. That was a big deal.
Yeah, it is a big deal, and it's good to see from an investor and just a consumer standpoint. The bullet point he did say, and we're looking at briefing here, Frank, is he doubts he will be talking about supply chain issues in a year. So we got to give him some slack there. Maybe it's a year from this quarter, which is a lot. And
I thought he said next year,
Well, I'm just saying it says in a year, but
yeah,
that could give that's like the Fed. You can move the goalpost on that.
Mm-hmm.
That's good in the sense of, hey, they do have they have a great pulse on the economy, right? They're the biggest bank by assets for consumers and all that kind of stuff. So you would think that they have their ear to the railroad, so to speak, and that's encouraging. They get a lot of boost from trading and all that kind of stuff. So yeah, overall people are healthy, like you said. There's a lot of cash floating around and sloshing around the system, which is good. Consumers are strong. The Apple news that I don't know if you have that Bloomberg article up, but I think you're right. They cut production by like 10 million phones or something. How is that not the bottom? Apple is the biggest, best, one of the most recognizable brands. They can control markets. They are influencers. They are leaders. If they're finally starting to get hit by supply chains, we have to be much closer to a bottom than not, right, Frank? I mean, if you're affecting Apple, what the hell else is there?
I mean, I would think so. And I have that article, Apple set to cut iPhone production goal due to chip crunch. So, just they're talking about the suppliers. But I don't know. I mean, with Apple, you could say it's the bottom, but I could tell you, if you listen to CEOs of the car companies that were lying through their teeth, which they were lying through their teeth, because if I'm seeing the data, they're seeing the data. And there was a lot of data, a lot of good reports, industry reports, telling them how bad it was. And all you had to do is go to try to buy a car, and you saw how bad it was. So they thought it was a bottom in Q2. Not even close.
Right.
Yeah. Now we're in Q3. We've seen the numbers continue to go low. Q4, those numbers are being brought down even further. So I don't know if I'm with you on that one, where I could say this has to be the bottom because it's Apple. What I do know is we do not have a lot of fabs, right? We have basically Samsung and you have Taiwan Semi. And those companies make most of the chips. Intel has a few fabs as well, but try to get out of that business. And there's capacity. There's certain capacity. And that capacity is 100% maxed out. So it's very difficult, even for the autos who have like a real-time supply management thing, when they'll see demand and then go to those companies, Taiwan Semi, they get their chips and say, hey, we need them. And unfortunately, it was too late because a lot of that capacity was taken up by Apple and other components, use it in tons of electronics, right? So autos got screwed. But it takes 5 years to build a fab plant. 5 years. Okay, you're not going to do it before that. Maybe, 3, 4, whatever. But until these things are built, I cannot see, with the demand that we're seeing right now, I have no idea how these guys think they are going to just solve this problem. I mean, unless demand comes down tremendously. But there's huge demand right now. It's going to be even stronger demand. That's what I'm saying. With infrastructure, if that bill passes, it's going to be even more demand. But just with the supply issues, if it's chips, if it's raw materials, I don't see this unclogging anytime soon, especially in the chip industry, because you're at full capacity. It's not like, hey, we're at 70%. It's like the airlines. We got 50%, and all of a sudden corporate travel comes back. They have the planes available. They'll get them out there. But how are you going to expand that? How do you make more chips when you don't have enough room to make chips? So that's an interesting thing to me when you see these new fab plants. I think Taiwan Semi's opening up one in Arizona. They're starting to open up in the U.S. We'll see how this plays out. But the good news is we're talking about it. Everybody knows about it. Everybody's warning about it. And usually when you see that, it's starting to get priced into the markets. That's the good news. I just think that it could be a little bit longer. And to be clear, this is a temporary problem. Doesn't mean it could temporary in 3 months, 6 months, 9 months. Yep. But they're going to solve this and be much, much stronger on the way out. But you just don't want to buy a company if this is going to be, or a stock if it's going to drag out, because you're going to be down 20, 30% before you know it, before you see the market roar back.
Yes. And I didn't mean that it was the bottom today, but yeah, you're right. We'll see how long this lasts. But my point is that, man, if it's finally affecting Apple, the big juggernaut, the optimist in me says, hey, that's a good thing. And hopefully, yeah, but another quarter or two, I mean, that's the new normal. People are just going to have to get used to higher shipping costs, longer wait times, et cetera, et cetera. So that's, it is what it is. And like you said, we'll get through it. And these are quote unquote temporary. You just gotta. We're like the Fed here and moving our goalposts. It might be It might be a quarter. It might be 2 quarters.
It could be
next
2
year.
quarters. Transitory. Everything's okay. Everything's okay. I will say another company I've reported is BlackRock. 10 straight quarters of inflows. Reported $5 billion in sales for the quarter. What do you think their assets under management is now? Do you have an idea?
I would guess 10, because I feel like I saw 8 to 9, so it's got to be higher than that.
They have 9.4 trillion. I think it's more like 10 trillion.
Oh, they don't even have 10, huh?
I'm pretty sure it's 10 trillion. If you look it up, it'll say 9.4, 9.5, but I think it's over 10. And I think that when Larry Fink came on, he made it a purpose of not to mention that number when you're hitting $10 trillion. I mean, not only is that higher than GDP of like 60 countries, but I don't know why I don't know if it's just showing how big they are or whatever. Usually he always says his asset.
Exactly. He used to be a cheerleader about it. Now he's not.
Now
why.
And then when you get too big, you're like, well, no. You can't mention it anymore. But 9.4 trillion in assets under management. Again, it's not, you're listening to this and Larry Fink, I'll get to his comments. He had some great comments on CBC. Squawk Box was fantastic today, by the way. Those guys interviewed so many guys from Starwood as well. They did a great job this morning. Had these guys on for a long time, which is what you like to see when you're interested in brilliant people. You want to, hear more from them, and a lot of times they get cut off in a minute or 2 minute segment. These guys were on for like 15 minutes each. It was great. But one of the things BlackRock said, which, I mean, a great piece of investing here, where you can invest in these companies, is ESG. He said huge demand for ESG. So it's ETFs, it's more company. Everybody's getting into this. We talked about it. So we talked about carbon credits is a great way. We talked about a couple names. Start looking at ESG companies. You're seeing Plug Power come back a little bit. Some of these things are wildly expensive, but money has to be pushed into these names no matter what. That's what they're creating, these ETFs. They're going to go crazy on them. Companies have to invest. They have to tap everyone on the shoulder and let them know that they're investing in it and saying, here, see, we are investing in this. And they make announcements that they're investing in it. They have to make a big deal out of it, and tons and tons of money is going to flow into this. And I still think there's great opportunities in this space, as every company is forced to spend tons of money, billions, and it'll be trillions in 10 years. Combine a lot of this going to ESG, which is pretty crazy. I thought that was one of the biggest takeaways. We're listening to BlackRock.
I didn't see the interview. I'll have to go find it. I saw some bullet points from him. Larry Fink is a good character in my opinion. I think he's a giant hypocrite, and I can't really. That's the nicest thing I can say about him. The reason he doesn't brag about the assets under management now are because through him and the other elites that look down their nose at everybody else and the common person, is because that now people are getting pissed off about it. And you can only push people so far until you say, hey, these are our rules and these are your rules. And now trillionaires and trillion under management isn't popular. It's kind of hey, what happened to this? Help out everybody else. One of his comments is funny about inflationary pricing and energy will be with us for a long time. Yeah, no kidding. And he says, we're working with oil and gas firms. Now, remember, this is the same guy that is throwing their political weight, because they're huge and they own basically everything through their funds and things. And they have tremendous influence. And these are the guys that voted for engine number 1 to help get on ExxonMobil's board and change them. So when they're working with them, that's just good code language for we're forcing them and we're telling them what to do for political correctness. That's why inflationary prices and energy are going to be with us for a long time. It is good to pay attention to this guy. They are a huge player and they can move markets, but just remember, he is not looking out for you. We are, Frank. We are looking out for everybody, but he is not. So that's the nicest thing I can say, Frank.
I know, right?
That guy pisses me off.
Tell me how you really feel. Yeah,
exactly.
I will say this, and Yeah, some of these guys I have my personal feelings about, but I even if I don't like someone, there's a lot of brilliant people out there. Listen to them.
Oh, absolutely. Yeah.
Yeah, I know you do. I do. A lot of people, not a lot of people do. They're just like, oh, I hate that guy. He doesn't know what he's talking about. I'm like, some people are brilliant in some areas, and they could be pretty much, an asshole in person. But you want to learn from him. That's the goal. Learn as much as you can. It's all about information. The more information you have, the better decisions you're going to make investing, and you want to have access to that as quick as possible. Not inside information, just knowing what's going on. And you could identify trends a lot quicker than everybody else, which we've done a lot through my years. Larry Fink, getting back to it, says inflation is definitely not transitory. Sounds familiar. He says still bullish in the long run, expects higher highs in the equity market, but there will be a transition period in the markets as costs of companies increase. He said companies will likely pass on those extra costs to consumers, but it sounds like he's worried in the short term. I hate people who say that, actually, who say, long term, we're going to be fine. Short term, we could crash. What does that mean? What does that mean? I mean, come on. You could get a 5-year-old to say that. I mean, is it, when? Timing. So if the market crashes, you're going to take credit for it. If it doesn't and goes higher and higher and higher, you're going to be like, hey, I told you it was going higher. I mean, come on. You're already rich. 10 trillion assets under management. Doesn't matter if you're wrong anymore, right? I mean, just go out there and make a prediction. Be bold. I don't know. Anyway. One thing he did say, rising inflation or raised inflation from energy will be with us for a long time. The U.S. cannot restrict supply without changing the demand curve or without finding alternative sources of energy. Translation, you're reducing supply. When do you reduce supply? When you see demand slow. We're reducing supply when we're not seeing demand slow. Demand is staying constant. Maybe it's going to go higher and higher. More people are going to be out driving, more planes, whatever. That results automatically in much, much higher prices. So why everybody wants to say, hey, alternative energy in the environment is clean. We don't have enough alternative energies to make up for taking that much supply off the market, which is why you're seeing prices skyrocket here. So how is that going to stop? I don't know. How do oil prices don't go to 100? I'm not too sure. Do you know? I mean, I don't know. Maybe it's me.
Well, no, I don't know where they're going exactly. But the thing there with, I would guess higher than lower, his point there on the demand side, Frank, how do you change demand? You stop doing something. Like how do you change demand without telling people, hey, don't keep your AC low, or don't heat your house, or don't travel? I mean, think about what it means to change demand and find alternative sources, which, to your point on the fab plants and semiconductors, you don't just switch over from coal and oil and gas to clean energy right away. You don't build a nuclear power plant overnight. You don't build a solar panel or install a solar panel overnight. I mean, you can do it quickly, but that's just not the reality. So what he's saying in a very nice way, again, for all us peons out there, is you're going to have higher energy prices for a long time, and you need to deal with it. And you know what? Because they're going to tell you it's okay, you ought to be happy with it. That's the actual tone from these influencers in the market, and it's ridiculous.
And the cure for demand so down is pricing, right? As prices go higher. But I could tell you, in Florida, it's about $3.10 for gas. In other places, I know in California, it's much higher. I think it's $3.50 or $3.40 in New York right now, which is very, very high, very, very high. But it's not to the point where people aren't driving yet. If you go to 4, if you go to 5, people are going to be like, oh, all right, I'm not driving.
Right.
That's when you see demand come down. But it's not at this level right now. People are not choosing not to go out or not to drive or not to do things, to travel. And that's just with your car. I mean, you're going to be taking flights. You're going to have to travel. You're going to have to do different things. You have to heat your home, turn the air conditioner. So, higher prices is going to hurt, but they're probably going to go higher since we're taking a lot of this stuff offline, even though we're the number one energy producer in the world. We were, which is something unheard of. No one in the world thought we would ever achieve that. That wasn't even on a table 10, 12 years ago. And now we're basically, which keeps us out of a ton of wars, which makes us absolutely powerful when you have your own raw materials and stuff in your country, could be the largest energy producer for a very, very long time. And now we're like dialing that back, which I understand. But if you're going to dial it back, you have to have the alternatives to replace them, which we don't. So that's why it's just very interesting what's going on. So
just remember, everybody, when you're paying a lot more for energy or gas or anything like that, just remember that we deserve it and it's worth it to save the planet, Frank.
Yeah, we're all going to die tomorrow.
CNN had a great story. It's not, it's comical. but it's our underwater future, what sea level rise will look like around the globe. And what they're talking about, at least these guys are getting halfway smart, because they quit the 10-year and the short timelines because, even though they have no conscience or spine about being wrong, it's okay. Remember, the world was already going to be underwater 10 years ago. AOC is on that same warpath and all that kind of thing. But now they're at least pushing this out to like 2050, 2060, stuff like that, to give them plenty of time. But Frank, they have a couple of these doctored up photos where they show like Buckingham Palace and how, it's going to be not underwater completely, but it's going to be flooded. And they have all these different, big popular areas of the earth, and they're split in half. So it shows it what it's today and how much water it's going to be underneath and all that kind of stuff. It's really comical. But yeah, just remember that, people, when you're paying through the nose for higher energy prices, invest in stocks to offset that, make some money, put yourself in a position to gain, and just know, hey, you're saving the world. So give yourself a pat on the back.
And it's great because usually the people who are making that claim, and usually they're in high-profile areas because they're on the coastline. There's always limited coastline real estate. Those are the people that are usually buying those houses over there. Even though we're predicting it's going to be underwater, hey, we're going to buy a $9 million mansion pretty close, but you're okay. But everybody else, the environment's going to impact everyone else except for you. But I love it. I love it. Okay, so we only got a little more time left, and I'm running on fumes here because I won't tell you why. But
let's go ahead. I can't believe he told me this morning. This is hilarious. What'd you do last night?
I have a very good friend. I have a very good friend who's in town who comes here every year. He didn't come here last year because of COVID. And we go see a football game, Jacksonville. He's one of my best friends that I know for like 25, 30 years. And we went out. We had beers yesterday, had some fun. It was 11 o'clock, and two guys walked in who we know that I used to play basketball with. And I decided to say, hey, right now, 2-on-2, let's play basketball. And we went to a park where they had lights, and we played till like 12 o'clock with beers in us, which wasn't a good idea. And we lost because my friend actually was... He was a mess. He couldn't cover anybody. This guy just kept hitting threes. I'm like, go around the pick, go on the pick, around the pick. He's like, he keeps going underneath. The guy keeps shooting threes. I'm like, you're killing me. He's like, I can't even move. I'm like, great. Anyway.
I'm prepping for the podcast this morning, having a coffee. And Frank, I said, hey, how was your evening last night? Oh, good. We played basketball last night. I'm thinking, what in the hell did you just say to me? No, that's impressive. That makes me tired. Now I'm worried.
Hey, gotta get you exercise in any way possible. But all right, we got like 2 minutes left. I wanted to get into one last story because, this is Unplugged. Actually, CNBC. The U.S. is now a top destination for Bitcoin miners, eclipsing China for the first time ever, which makes sense because China completely banned cryptos, and probably because they don't want anybody to leave. With Evergrande, a lot of stuff with real estate going on there. Again, they banned it like 6 times, I think, this year. They're up to 6 times, Daniel, or something. They keep banning it and banning it. We're going to ban it again. Now we're going to ban it again. But anyway, Bitcoin miners, this is 1/3 of Bitcoin's hash rate in the U.S., and this is according to Cambridge Center for Alternative Finance, who did the study, is at a 428% increase from last year, September 2020. So as of July, 35% of Bitcoin's hash rate, that's a term just used to describe like the power, right? Collectively, that computing power of miners when you're mining for Bitcoin is in the United States. We saw this trend coming. We have some of these in our portfolio, in our CCI portfolio, crypto intelligence portfolio. It's not a surprise. It's just you have to get cheap energy. I've been to these, I won't say plants, but you're seeing all these servers, the computing power. It is like 120 degrees in there. They need fans, or they want to put them in areas that are cold. And if you don't have cheap electricity, I mean, now you can go a little bit further because this all depends, guys. This all depends on where Bitcoin is trading. So when Bitcoin is at 7, 8,000, 10,000, 12,000, it wasn't as easy to break even because this isn't something that's scalable. This industry is not scalable. So what it means is in order for you to mine more, you need to buy more machines. You're going to use more electricity. You need to find more space where electricity is cheaper, right? You just can't turn it on and all of a sudden, boom, everything's good, it's going higher. So it's a reflection of Bitcoin and its price. So if you're a miner, you need to see the price of Bitcoin go higher. And if you're a believer that's going to go to 100,000, whether it's a year from now, 2 years from now, 3 years from now, these miners are printing money, exploding profits, numbers that you thought weren't even possible. And that's going to continue as long as Bitcoin continues to go higher or even stays at this level. But that was a pretty cool story. It was on CNBC. I'm seeing more and more CEOs even talking about crypto. Start with talking about crypto today and Bitcoin as a store of value. More and more people, more and more important people are getting in. But, I mean, we already knew that it's here. But, now all these stories are coming out on CNBC, things that we've been talking about for a while, and that's good. It gets more mainstream, right?
Yeah, the big takeaway for me on this, and why everybody should be excited, is because this is just a great present example of how innovation, capital, and freedom leads to solving a problem or producing something of value that people want. So China has crackdowns. A lot of the mining was going over there because it was cheaper back then to mine. They shut that down. They move operations. They go to a friendly area. They're using more efficient energy to not only scale, but to make a profit. Everything is driven by profit, and that's a good thing because that's where charitable acts come from. This is just another amazing story of capitalism, and it's unfolding in front of our eyes. That's something to be excited about, that we get to experience that.
You bring up a good thing, and we'll end on this. You always want to look when there's negative news on something, it could be positive for someone else. I think the negative news of Southwest is going to result in more people going to Delta, because if you listen to the stories of these people and had to pay over $2,000 to change their flights, they're really pissed off. There was massive delays. They had to stay at hotels. They got stuck at airports. And you know what? If that's me, I'm not using Southwest anymore. So, when you see China say, we're banning crypto, you need miners. So what are they going to do? A lot of them are coming to the U.S. The companies we recommended are in the U.S., but that's how you should always look at stories, negative or positive. There's usually companies that are going to benefit and other companies that aren't. For me, you'll see 3 or 4 stocks, I think in a Curzio Research Advisory portfolio, that were game changers, where the government made a specific change that created a huge tailwind for a certain company because they're in a certain industry and they're restricting a lot of small players, right? So you always want to look for that advantage because that could result in tons and tons of more business going into another name when you see bad news. The miners, China, it's great for U.S.-based miners. And that's what I would focus on going through earnings season. Pay attention to what the CEOs are saying, what the comments are, the geographies, what's doing well. You can always find tons of ideas, not necessarily the idea of the conference call that you're listening to, whatever large cap that is, but you can listen to that, and trust me, you'll have so many different ideas in different areas where you'll research and find better names. That's why I love earnings season, and it's officially here. So, Daniel, any last comments?
No. Cheers. It was a good,
That's it.
Good time.
Good time. Earnings season. Busy.
Yeah,
if you are subscribed to any of our portfolios, expect lots of updates over the next couple of weeks, as all of our companies are going to be reporting, which is really cool. Daniel, thanks so much for coming on. I really appreciate it.
All right.
One last note here, guys. So the first big money trader, the beta version is out. This goes to our Curzio One members, which have access to everything, but they get the chance to take a first look at all of our new products and give us feedback before we launch, which includes, a couple of early trades. So this is going to be written by Luke Downey. This is back-end newsletter. Someone I'm a huge fan of. Going to have him on probably in a couple weeks, the podcast. It's similar philosophy to his current, the Big Money Report, except there's going to be a lot more trading. So he uses a system that tracks the big money and gets it alongside, not after. He's doing fantastic. He's got a great track record. He's been doing this for a very, very, very long time. Everyone who subscribes on it has been incredibly impressed. And I won't say everyone, but I would say 98%. But using this system, he's able to get in and out very quickly in and out of these positions. I'm excited for this newsletter. He's excited to write it, and we're going to launch it pretty soon. But right now, the beta versions go out first. Maybe we'll have 2 or 3 of those. Those go to Curzio One members. Let us know how you feel. Again, that's a premium membership here. And really, really cool. Just came out with that first issue. I read it. It's awesome. Just explaining exactly what he's going to do. A couple of new recommendations. Really, really cool stuff. But we want to hear from you, and that product's going to be launched really, really soon. That's our first new product in a long time. We're really excited to launch that, our first back-end product, a new back-end product in a long time. So I'll report back to you with stuff where, I always try to discount products as much as I can to our listeners, of course, to our subscribers. So we'll figure that out when it comes around, but really excited to launch this product, which you'll probably see in about 2 weeks. And, you get emails from me. I'll be mentioned on the podcast if you are interested. Okay, guys, so that's it for me. Really, really appreciate all the support. And I'll see you guys tomorrow. Take care.